This is Fintech Insider News. This week, LendInvest raises £500 million from JP Morgan as NatWest joins the Open Property Data Association. Enfuce announces a 2-in-1 debit and credit card for more European countries in partnership with MasterCard. And after 7 years, the open banking framework is now finally complete in the UK. We'll be discussing all of these and more on today's show. Are you struggling to close deals? B2B selling is tougher than ever, and that's why we want to tell you about LinkedIn Sales Navigator. LinkedIn Sales Navigator is a sales intelligence platform that helps professionals effectively prospect and engage high-value customers, drive higher revenue, and increase sales performance. Sales Navigator helps you target the right buyers, surface key signals such as job changes or which accounts you should prioritize, and shows you hidden allies so you can find those buyers who are most likely to convert. Fueled by LinkedIn's 1 billion member platform, Sales Navigator gives you the most up-to-date first-party data, enabling you to unlock conversations with the people who matter. Right now, you can try LinkedIn Sales Navigator and get a 60-day free trial at linkedin.com/fintechinsider. That is linkedin.com/fintechinsider for a 60-day free trial. Let LinkedIn Sales Navigator help you sell like a superstar today. Just go to linkedin.com/fintechinsider and get started. Hello and welcome to episode 897 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at LendInvest. I'm joined this week on Fintech Insider News by two guests who are here to break down the biggest stories from the past week in fintech and financial services. First up, we have a Fintech Insider debut for Vanessa Schotes, CMO of Enfuce. It's great to have you on the podcast, Vanessa. Can you tell us a little bit about you and your role at Enfuce, please?
Sure. Well, first of all, thanks so much for having me on the show. It's great to be here. So I'm Vanessa, work as you said, CMO at Enfuce. We're a issuing processing provider who are proud to power a tremendous amount of card programs for our clients across Europe and scaling globally. Excited to bring the next generation of payment innovation to our markets and innovating around particular card payments.
Fantastic, and welcome. And we also have a Fintech Insider debut for Henk van Hulle, Chief Executive of Open Banking Limited. Welcome to the podcast. Now, I know we haven't had you on the podcast before, which seems quite hard to believe, but you even won an 11FS award in 2022 for Most Progressive Regulation for your work with VRP implementation. So you're quite well known among sort of fintech insiders and listeners to the show. But can you tell us a little bit about what you've been up to at Open Banking Limited in the last year or two? And maybe for international listeners, what is Open Banking Limited?
Hello, everybody, and thank you for inviting me as well. And it's a real pleasure to be here. I'm CEO of Open Banking Limited, which is a company actually it's in the middle of the ecosystems. It's between the fintechs and it's between, of course, the financial services providers. And we have currently about 94 financial services providers on the platform. And on the other side, we have about 250. So what we do is ensure that the data exchanges, that it's all safe, and also that it's a trusted and vibrant and growing ecosystem. So we ensure that the banks are conformant to the open banking and compliant to the open banking guidelines. And that's what we're celebrating this week as well, by the way, but we'll come to that later. And of course that we can create amazing customer experiences and innovate and compete in the industry. So yes, I was here a couple of years ago collecting an award, and I didn't know that word existed even, progressive regulator. I didn't know that could even be in a sentence, those words together. So I was really honored because we are, as you know, arm's length government. We're not really commercial players, not really often invited to award sessions. So thank you so much. That was a great experience. And it was about innovation at the time. It was about variable recurring payments. which indeed we launched since. So sweeping in particular, and that's what happened since then too. But to your question, I think since probably the major milestone was the completion of what we call the order, that the 9 banks have completed their roadmap with us. So we are now live, and I thank the ecosystem for that, because there was a lot of initiative in the regulators. I commend the regulators as well, of course, because this has been quite a long journey. Thank you, ecosystem. And the results are impressive. So if you can look at the numbers today, we are actually 7 years young. That's how I phrase it, Benjamin. We're really a young category in the world, and people will understand globally that yes, we started, actually the British regulators started this movement worldwide, and the results are astounding. So we have 11.3 million users. That grew by 80% year on year. We have now 20 million payments as well a month, and that grows like 24% a month, particularly on VRP. I think we're about 4,000 or 5,000 people in the industry now working in open banking, highly skilled, technical skilled people, yielding a value about 4 or 5 billion in the industry. So, and the penetration rates are, in terms of small businesses, about 1 out of 5 using open banking, 1 out of 7 consumers in the United Kingdom.
Fantastic. Huge achievement. Well, welcome to both of you onto the show. All right. Well, let's start with our top story this week, which is that LendInvest has secured a £500 million investment from JP Morgan. This was reported in City AM. So the UK digital mortgage marketplace has now picked up £1.5 billion in total funding, with the biggest cash injection yet from JP Morgan, which first invested in the company back in 2021. It's a significant boost to LendInvest's fortunes after a tricky year for LendInvest and the broader mortgage sector in the UK. So while LendInvest has seen an 86% share price drop since it listed in 2021, drops in inflation and increased confidence in the UK property market have buoyed the firm, and LendInvest is expecting to return to profit in the coming financial year. We spoke to Rod Lockhart, Chief Executive of LendInvest, to find out about what the investment means for the company.
We're thrilled to secure this new funding. We've upsized our partnership with JP Morgan to £1.5 billion. And this makes them, by some way, the largest investor on our platform. So the backing is really important. But it also brings our total funds under management now to over £4.5 billion. And we're a property specialist property lender. So we're serving borrowers that aren't well served by high street lenders. And we're doing so with a digital mortgage proposition, so making it faster and more transparent for borrowers in the space. And over the coming months, this funding will be deployed to landlords to acquire or remortgage buy-to-let property. And hopefully in the future, we'll also use it to support homeowners too, particularly focusing on self-employed people or key workers, people with complex income, and support their borrowing needs as well.
And alongside this news, NatWest has announced this week that it will join the Open Property Data Association. So, Henk, do you think we're seeing a bit of a rebound in sort of confidence in sort of property lending in the UK? Because obviously, there's been a bit of nervousness. Do you think there's sort of any sign of a rebound? I don't know if you can see anything in the open banking data. I don't know if you can see, people doing sort of valuation checks through open banking. What do you think?
The beauty of open banking is we're the plumbers. We can't see actually what's going through it. So this hopefully remains safe. So if we were to be able to see, that would be worrying. But what is not worrying, I think, here is the innovation element of this. I mean, we see this encouraged movement of more and more data being used to make these lending decisions as we speak. And there's now more oxygen and more fuel. If I hear 4.2 billion on the funding side, is to particularly fuel underserved segments in the market. And that's where the rebound is happening. I can see in many underserved areas and SMEs as well, but particularly also in the And I hear the CEO talking about key workers and also people who have actually very thin credit file, actually have no score even, let alone a bad score, no score. And I think what the new technology and the exchange of data and enriching data with other data sets does today is actually create more informed decisions around the affordability, suitability of certain underserved segments in society who all of a sudden get access to funds they never had before. Even on our platform, there are social lenders as well, or what we call non-discriminatory lenders. And that is an entire segment that very thin credit files or no credit files at all, and you enrich the data with open banking data, but also other data as well. And on the basis of that, you can accelerate a decision for these segments. And there are key workers, there are civil servants often as well. And we can see certain areas. I think that particular case I'm mentioning has now issued about 100 million as well in terms of lending. And what they do at the same time, and 75% of their customers are female. And there's a very underserved, diverse group as well. That is, and there are also microloans involved, etc. But they overlay this with other services, and this is for the benefit of society and the good of society, and that's where open banking comes into play too. Is that whilst they're making these assessments of lending, they're also looking at what benefits you might have claimed, and then as a key worker, as an underserved segment in society. And then they can even check within certain databases of GWP and others where you can actually claim, and they even have a missed claim ratio on this. So you missed out on so many millions as well as a group or as an individual.
I was going to say millions for an individual is good news.
But and the underserved group, and they publish these numbers as well, that the overall missed claims are X million as well. So what we see is, in particular, actually less with the incumbent banks, we see much and more alternative lenders, as we call them, and neobanks being more active in this space because they have also the specific technology to reach the end segment faster as well.
It's one of the things I love about fintech is when fintech, fills a market gap and manages to reach, parts of the market that others can't reach, a bit like one of those Dutch beers. It's great when fintech can do that, and I did love the focus in what LendInvest is trying to do in the future, of focusing on the sort of self-employed, key workers, people who are finding it very difficult. And of course, that's really common across European markets. Is people, particularly younger people, really struggling to get onto the housing ladder. Vanessa, I don't know if you've got a strong view on this, but so many people have sort of challenges getting onto the property ladder and buying property. What did you think about sort of LendInvest sort of coming into the market? Do you think there's an opportunity for more digital mortgage lending?
100%. I mean, look, anything that gives people the opportunity to join the housing ladder, we all know the barrier to entry there has seen a massive generational shift. People nowadays really struggle. So seeing investment go into a solution that will open that market up, give people a chance to be part of the housing market in a way that's close to so many of the younger generations nowadays has got to be a positive, right? So I think, again, the excitement is around the innovation there in seeing new data points coming into the equation for evaluation to enable people to be assessed to come into the loop. Moving away from kind of just that traditional lending criteria that we've seen in use in the past, a real positive movement for both seeing the impact technology and innovation can have, but also in terms of the impact it can have on society. And I echo Henk's sentiment here around the inclusion. And especially when you see inclusion not just having a generational impact, but also you mentioned earlier, kind of male-female angles on things as well. We have, as an industry, the opportunity to move mountains, and I think this is a great example of seeing more progress, and that has to be positive.
It's true. I was intrigued by that point you made about women being better served by some of the sort of newer digital lenders, and that women have found it more difficult to get mortgages, or by implication. I hadn't probably should have done. My wife would probably be appalled, but I hadn't necessarily realized it was more difficult for women to get mortgages.
Yeah. I found it very exciting. So what you mentioned about the other bank, NatWest, in terms of the Open Data as well Institute.
I was going to ask you about that. Yeah.
Yes, I think it's an exciting to see that we are seeing now also more standardization there in the property data as well. And I think there's a great initiative by the Institute to encourage that as well in the industry. Because, if we all build in Lego and we, are very creative then with Lego as well. So you build in Lego, I'll build in Lego, and we can do more. But if you don't like Lego and you have something else.
Meccano.
Yeah, then how is that going to work? So the good news is that indeed several banks now also just contribute to that as well and collaborate in this space. So can you imagine probably 10 years ago to make two banks collaborate? I mean, that's difficult. So nowadays people understand things are going so fast that they need to work together to get there. And just picture this about filling a gap. I mean, can you just think in the United Kingdom, I don't know what the average time is, it's about 3 to 4 months to get a house. The home buying process is probably 3-4 months, and it's a very hard process, difficult. It's a miracle nearly to get it and buy a house in the United Kingdom. Can you imagine that we can do this now in a month, for instance? That would be revolutionary. Yes. And actually, this is the aim. This is get to standardization, get that gap filled in terms of new tech and also as well. But it's, of course, not about the tech alone. It's about, ensuring that all these things link together and joining the dots. And if this all is digitized and very quickly, all these searches and all these valuations and the surveyors and the estate agents and your certificates and your mortgage and your insurance, all linked up in one system, you can just see that this is going to happen. But it's a bit like the early days of open banking when you had to make 9 banks, put one format together.
So I always see open data as kind of the logical extension of sort of you go open banking into open finance, encompassing sort of pensions and insurance, and then out to sort of open data where potentially all of the data that all of us as sort of as individuals create is potentially accessible in sort of shared formats with permissions, much like open banking. Do you think that maybe, with the new government in the UK, do you think that the new British government might kind of seize the opportunity to become a sort of leading market in open data? Or do you think other countries might overtake the UK? Because there's always this question, is the UK going to maintain its lead in open banking?
Yes.
Do you see the ambition in many countries?
I'm very excited and optimistic in both fronts, by the way, not only in the United Kingdom, because we are really cross-party, even regardless of the current government. But I, of course, have some views on that too, in terms of a government who wants to achieve a lot, grow a lot without spending money. This is quite an interesting concept. And I am telling the government as well in terms of, you can do that through open data, because you unlock the value of that data sharing. What I just said about accelerating home buying, etc. I mean, you can unlock much more and make faster decisions, approve better and more as well. I'm very excited about the prospect. So we also have this bill in the United Kingdom, which is in many countries, we talk about data protection bills, particularly here as well. We talk about a digital information and smart data bill, which is going to be kind of the same bill as the one which was supposed to go through the previous government. But that will be a very important milestone for us, because that will put the long-term regulatory framework in place for data exchange in the country. So we use as a smart data example, open banking, but we expand beyond banking, indeed, other sectors, telecom, energy, mortgages, and others. But you need that framework to make it work, and that's why we need a bill to go through.
It's like your baseboard for your Lego. It's kind of the foundation.
Yeah, exactly. You could, that foundation we need, because you need minimum standards on everything, and the minimum standards on conformance, access to that data, integrity and quality of the data, the speed of delivery, the consistency of delivery for customer experiences as well. So you need all these rules in place, the framework in place, and when things go wrong or when there are rogue players, you also need things in place to manage that. So that's a bit the boring thing, but to make it happen, we need that framework.
Okay,
thank you.
Let's move on to our next story, which is that Enfuce has announced 2-in-1 debit and credit cards for Europeans in partnership with MasterCard. And this has been reported in various different places. So the digital card fintech will bring the product to British, French, and German customers. Enfuce says that customers will be able to dynamically switch between credit and debit payment options on the same card. Combination credit and debit cards have been standard in the Nordic countries, but this is a first for the UK. According to research commissioned by Enfuce, this is something that 69% of consumers apparently would be open to. So we're lucky enough to be joined by Enfuce's CMO, Vanessa. Vanessa, why should people be excited about combination credit and debit cards?
Look, I think generally it is all about always being on a journey of improving customer experience and that overall customer journey. And what we're excited about is, this is a use case that that enables people to have maximum choice in terms of how they wish to go through payment process, how they wish to leverage both their existing account balances versus any credit they might be tapping into, and to be able to do this very simply on one piece of plastic. So having a card that gives you dual use, you can make the decision at point of sale, and you can very easily flex between the payment choice that you want to make for various reasons, right? You might want to use your account balance because that's what, at that point in time, you feel you want to leverage that for. But at the same time, there might be reasons you might want to tap into your credit facility, be that particular protection on card purchases. And you can make that choice very easily, whether you're paying online or whether you're paying in store, by using this combination card that combines two pans in one piece of plastic, and at point of sale, you can choose which one you want to go with. So we're excited to see that coming in.
How do you...
No, of
Sorry,
course.
I interrupted you. How do I make that choice? So I've got one of these new cards. I'm
Yes.
super excited. It's brand new. It's shiny. I'm standing buying my new shirt. How do I switch between the payment methods? How do I say, I'm going to put this super expensive shirt on my credit card? How do I do that?
Do you know what? It couldn't be simpler, and that's why we're so excited about it. So, you are at that point of sale, as you usually would be. You have made that decision to buy that expensive shirt. You pull out the one card out of your wallet, put it into the terminal or tap it onto the terminal, and you will be prompted by the terminal to choose between credit or debit.
Okay, so it comes up on the terminal.
Absolutely. So you're prompted right there, and then there's nothing that you need to do in addition other than make the choice at the time and hit the button to confirm which way you wish to go.
There's probably going to be a few older listeners like me listening to this and saying, well, I've got a credit card and a debit card. Why do I need a card that does both? Tell us, what is it about Nordic customers? What do the Nordic customers know that other Europeans haven't learnt yet?
Well, look, I think the key thing with our Nordic customers, for them, this is already something that they've been using for years, right? We all know there is only so much space you have in your wallet. We all have a lot of cards that we carry around with us. So being able to take up one less slot, having a combination product that enables you to do both, reduces, whether you're mixing your cards up, you're juggling around at the time to find the right one. This is your one card that goes and enables you to purchase in both directions. And, I think, again, you see different pace of development in different markets when it comes to overall infrastructure that's also available to support this. The Nordics have proven to be really innovative on that front, hence why this has been in market there for some time. But we are really excited that this is now also moving with the times in other markets and possible. So, and look, there's another aspect to this. There's one, ease of use for the consumer, and consumers, as you said in our research, they tell us they are keen on this. They want this. We see it already in operation in markets where people are finding it a really good use case. But it also has a huge environmental impact, right? We all know everyone is looking to reduce their impact on the environment. Plastic is plastic, and the less we carry around of that in our pockets, the less we have to put into production, and the better. This way, we can reduce that by turning two cards into one physical card.
Henk, what do you make of this product?
Well, I'm originally from Belgium, and we have quite a similar product there too, and we often use it indeed as one product. I think for us, in terms of open banking, we encourage anything that has to do with innovation. We promote any more competition as well. And choice is very important, as you said, Vanessa. It's about customers' choice and whatever the need for that customer is. And that's very, very important for us because in the end, it all starts with the trust and the choice from a customer, which could be a consumer or a business or a corporate even. And that's where we think always in terms of what is the benefit for that end user to use it and what are the needs. And we encourage any additional choice in payments. People know that open banking not only runs on the card rails, but also on A2A rails and Swift, SEPA, and BACS and so on too, and CHAPS, and etc. So we are always encouraged as an umbrella, if you want, as many payment methods within that umbrella and to the choice of customers.
Got it. Vanessa, you said you're launching this in Britain, in France, in Germany. Now, those are 3 markets with very different card behavior and card habits. The British are a bit more open to credit cards. Germans historically been quite averse to credits. The French tend to use deferred debit cards rather than credit cards, etc., etc. Do you have a hunch about whether the British, the French, or the Germans are going to sort of embrace this fastest? Did you see anything in the surveys you did? Have you got a sort of hunch of the Germans are going to love this and the British are going to be a bit slow? You got a sense of where you think you're going to see the most enthusiasm?
Oh, you're going to ask me to pit the nations against each other here now.
Yeah.
No, look, I think you're right. There's always an element of cultural difference to how fast the pace of adaptation is on this. And I think, we're seeing the markets develop, yes, at different paces, but also, we might see some surprises in there. I mean, I myself live in Germany, so I see how card usage is there. And as you said, people are very much more on maybe the traditional debit side of things and kind of paying off account, a little bit more cautious around credit, but it is coming in more and more and it is becoming more prominent. So again, we actually feel it's a really good inflection point in terms of the market to have that dual product come in and give that choice at that moment in time, which maybe combined in one product also feels a little bit less crass than physically pulling the other card out. I think, again, the UK has been quite progressive in lots of ways. I think, again, I from the research we've seen and also how we anticipate this landing, we're quite confident that the UK will be really open to this and be taking it forward. And we know that UK challenger banks are also really looking to diversify their proposition and find new ways of offering new experiences and progressively new services to their customers. So we really feel that will resonate well in terms of the way that they wish to position themselves and the way they wish to keep enhancing their own experience for their customers.
Is there a group of customers that you think are sort of particularly well suited to this? I don't know, is it younger customers or older customers? Is it sort of maybe business credit card users versus consumers? Is there anything from the Nordic countries that actually, women love these cards and men hate them? I mean, is there any particular type of customer that you're expecting to be most enthusiastic?
Look, I think use case wise, we do think that it's going to start with a consumer focus, and that consumers are more going to be the ones who will be most inclined in adopting it quite quickly. But we also see B2B corporate use cases for this longer term. But the focus in the immediate term, as we said, is kind of looking at how do we work with our banking partners in various markets to help them use this particular product to enhance their own proposition to their consumer customer bases and to help them differentiate by having this and giving access to it.
And if there's people listening to this who say, I love this concept, and they happen to be living in Britain or France or Germany, have you got any issuers already issuing them? I mean, I realize you're just rolling this product out now, but if I really want one, can I go to
beta test?
Can I go to Sparkassen Köln? Or who's issuing them?
Well, hopefully you can soon. So, like you said, we've just launched the product, right? We just announced yesterday that this is going out to market. So we're in conversations with some people, and we're really excited about, feeling momentum behind this and the fact that there is demand. We're getting really positive feedback from the market, and we do hope to see this live in the 3 markets that we've now launched this in the foreseeable future. So watch this space, but it is early days. But yeah, as I said, we anticipate some pace behind this, knowing how popular and how almost, everyday normal this is in the Nordics. That's simply, it's become a day-to-day use and expectation that people get this from.
Okay, so the short answer is I really want one, move to Sweden.
Well, yeah, or Finland,
Or Finland.
lots of great places to live.
Okay, well, fantastic. Very, very exciting, and congratulations. And I look forward to seeing that rolling out.
Thank you. No, we're excited too, and thanks for giving us the opportunity to talk about it.
Okay, well, we are just going to take a quick pause here, and we will be back very shortly.
What's new from Apple? There's the new iPhone 16 Pro, built for Apple Intelligence. And it comes with the all-new camera control, giving you an easier way to quickly access your camera tools. The new Apple Watch Series 10 has our biggest display and our thinnest design ever. And this? It's the sound of active noise cancellation, now available on one of 2 new AirPods 4 models. So quiet. Check out all of the new products and new features at apple.com. You can even buy yourself something new. See apple.com for product availability updates. Apple Intelligence coming this fall.
This episode is brought to you by Coffee Mate. Coffee Mate is the world's biggest coffee lover because we love all the ways you enjoy. Wait. Coffee Mate can't love coffee more than me. I'm a foodie. I went to Kyoto just for a nitro matcha latte. What? Oh, I have to finish the ad. Coffee Mate, for the love of coffee.
Welcome back. Before we dive back into the rest of the show, we want to tell you about our latest Insights episode. This time, we delve into one of the first touch points with the product, the onboarding process. From streamlining the terms and conditions to gamifying personal information entry, we discuss this crucial stage in the customer journey, all with a panel of expert guests who've built onboarding processes from the ground up. Now back to the news. So the UK's Competition and Markets Authority has confirmed that the open banking roadmap is complete. This means that all 9 of the UK's core banking providers that were originally mandated by the Competition and Markets Authority to offer enhanced open banking functionality have now done so. Allied Irish Bank, Danske Bank, and Bank of Ireland, 3 not very British-sounding banks, have all now implemented a series of measures, including variable recurring payments, or VRPs, for sweeping. These mandates were set out all the way back in 2017 in the Retail Banking Market Investigation Order, part of blueprints for better competition in the market. And we're very lucky to have Henk van Hulle, CEO of Open Banking Limited, on the panel. How pleased are you to see the roadmap completed?
On the one hand, very, very pleased, of course, because this has been a process for the last 6-7 years to make that happen between 9 banks. It's also been a journey because each bank had to, of course, figure out how to do this. And there are many versions. So we are now already at version 4 of the standard. So it's not only just that we delivered, but also, it's a bit like when you download your iOS or other kind of softwares. It's now we're at version 4 in the industry. So we're very excited. We implemented now and completed the roadmap. And we're now looking forward also, of course, I'm excited about looking forward towards what's going on in the future. And it's now mainly focusing on, the foundations are there. We're building upon that now. And it's all about long-term growth, innovation, and more competition in this field going forward.
The sort of introduction to the story sort of made it sound as if sort of Allied Irish Bank, Danske Bank, and Bank of Ireland were sort of almost sort of holding things back. And of course, now those 3 banks actually own British subsidiaries.
Yes.
And they're sort of some of the slightly smaller banks in the UK. Was it more difficult for them because they were smaller businesses? They haven't got the scale of a Barclays or an HSBC or whatever.
So one of the requirements for us was, of course, to show that you can cope with volume before you go live. So there are specific ways of getting to live, what we call the managed rollouts, the MROs. And in the MROs, the banks also need to partner up with providers, with TPPs as we call them, or fintechs, in order to show us from the sandbox that they can go live at volume as well. So it's a really thorough process, and we will not, say your roadmap is complete, individual bank, if you can't prove that to us as well. So it's a rigorous process, and it's of course complex, but also the scale indeed is important. And for some of the banks, it wasn't easy to find the volume, and also even some partners to go into the sandbox area, and that particularly the banks you are mentioning. But they've done it now too. So it's yes, the what we call GB6 were earlier. They already delivered a bit earlier, but it's for the CMA, it is important that they all are crossing the line, not just 3 are waiting, etc. So that's why the message this Monday by the CMA is quite a milestone.
And the British market's evolved a little bit over the 7 years, because they, conspicuously, firms like Monzo, like Starling, Revolut didn't have anything like the number of customers they have now. Of course, Revolut wasn't even a bank. You got Tandem, you got Atom Bank, you got a whole bunch of others. When did they become part of open banking?
So they actually could kind of sail on the waves of open banking created by these 9 banks. So when the CMA had to issue this remedy or order, at the time there was a cutoff, so you had to have minimum 50,000 customers, both in terms of current account or in terms of business accounts. Of course, at the time, these 9 banks were falling into that category, but that was 2016-17. Now you see Monzo, the numbers of Monzo, 10 million customers. So they have grown quite a lot since as well, of course. And this has to do, of course, with the PSD2 regulation as well. So to comply with PSD2, you can, of course, comply with open banking and with our guidelines. And this is where the neobanks come into play, like Revolut and Monzo and Starling, you just mentioned. And of course, now we're moving to another model, and that's why we're now completing the roadmap. That doesn't mean that the order has been completed. So now we need to figure out where we go next with this, and we will call the leveling up. That, of course, a lot of banks have become bigger now, so they might benefit, but might need to contribute in the future too.
What's coming? So what's coming next? What do you want to see coming next? What's the sort of next sort of innovations you'd like to?
So as you know, open banking has the beauty of data exchange, but also what we call initiation. So an action, so an API can create an action rather than just sharing data. And that's the beauty. And that's, I think, why the UK has been so successful in open banking, because when we launched it, we just were a little bit wide and then deep. People can't see it, but I'm doing something wide and deep. And that meant we could do read and write APIs, but mainly in open banking. What we've seen other countries doing is very wide, but not deep. And other countries just small and then very deep. And so I thought we got the balance right. And now we can widen this. We can add more actionable APIs or enhanced APIs, or what we call premium APIs to it. And sectors, of course. So what we call the verticals, so energy, communications, etc. And then the horizontals is more the enablers. And you will hear talk in the United Kingdom about ID as well. So ID verification, you will hear about payments and hear about fraud prevention tools, etc. These are more horizontal across all these sectors. And to your question, I think the VRP, so the variable recurring payments, not the sweeping, but the more commercial ones, are going to take off. I think this is a very exciting new area. And I share that with Vanessa. It's a payments area, so we're all very excited about payments. Perhaps our customers aren't. But so VRP is going to be, I think, a big one. And I think there are many use cases as well in terms of payments and open banking payments. So, for instance, HMRC is using us for over 40 tax codes of collection. HMRC already collected £8 billion this year just through open banking. And since they launched, they have collected £27.5 billion since 2021.
Vanessa, I'd love to bring you in on this. I mean, in the UK, obviously, we get very excited about open banking, but obviously sitting in Germany, you've got a slightly broader perspective on PSD2 more widely, as Henk pointed out. And are you seeing any sort of changes in payments? Do you think we're going to see more use of sort of paid by bank payments instead of cards? Are you hearing or seeing any kind of movements like that? I'm curious on your sort of perspective from outside the UK on this. Have you got thoughts on?
Sure. I mean, look, I think the payments landscape is forever evolving, and it's forever evolving in all markets. I think it's been exciting to see how transformational open banking is on the payments industry as a whole. And I think what is really bringing into the equation is that increased competition and that chance to keep enhancing the customer experience. And I think that's the same whether in Germany or in UK. It's going to keep being a forward motion. And again, as Henk said, the payments is an ecosystem, and we need all different angles to keep evolving, to keep delivering new integrated embedded experiences, to keep the world moving forward, and for payments to keep being an invisible part for our customers of every day, as invisible as possible, right? We want it to be easy for people. We want it to be intuitive for people. And that's where it comes into the equation. And lots of things people in everyday life don't even think about, like the way it helps enhance security. It helps enhance fraud prevention. So, we're excited about it in the markets that we're operating in, as much as we're excited to see it in the UK. So,
You see it in the proposition development as well. It's what we call embedded propositions or embedded finance, where you buy something on whatever a website and immediately get warranty insurance on the object. You get insurance on the back of that. You get to choose when it's getting delivered and how it's wrapped and packaged and how you pay for it. If it's pay now, later, or immediate, or on credit, whatever. So you get this complete embedded proposition, which is amazing to see. And this is now all built on these Lego foundations, where all these APIs start to interact with each other and enhance the customer experience.
One last quick question for you, Henk. Do you think there's any chance we're going to accelerate the rollout of VRPs? Because virtual recurring payments, variable recurring payments could be fantastic as a replacement for direct debits. Direct debits, invented in like the 1970s.
Yeah.
VRPs have got so much promise, but they were only introduced for sweeping, which is great for the banks, but not much help for anyone else.
Well,
can we accelerate that?
Yes, I think what we are actually, and particularly in my case, we are together, again, commendable. The regulators are stepping up, and it's a committee called the JROC Committee, the Joint Regulatory Oversight Committee, with the PSR, headed by co-chaired by the PSR and co-chaired by the FCA. And they have indeed created with us a work plan where we are looking at rolling out VRPs, commercial VRPs. And in order to do that, you need, of course, the industry to get together, and we need to get some basic rules together. So there needs to be a legal framework, which then copes with customer protection, liabilities, and then also, of course, you need to make them commercial VRPs. Yeah. So you need to make sure that this is a sustainable model that the parties can agree with. It's like a scheme. It's any scheme. It could be a voluntary scheme. It could be a regulatory scheme. And this is very interesting in the industry right now, because we're doing a bit of both in a way, and we're giving some oxygen to the industry also to develop it themselves at the same time. So there's actually a lot of traction on VRP, commercial VRP in the industry.
Excellent. Well, good luck with that. It's a hugely complex topic, but it'd be fantastic, I think, for merchants and consumers across the UK if we can get those in. Okay, let's move to our next story, which is that Miami-based bookkeeping fintech finally raises $50 million. And if that headline sounds confusing or perhaps a little partial, finally is the name of the company. So this SME-focused fintech was set up by Felix and Glenys Rodriguez, a husband and wife founding team, who started helping local Miami firms keep on top of their books. Now they've built out their proposition into an AI-assisted business operations solution, including finance, bookkeeping, and even HR, aimed at small businesses and retailers. As part of its Series B, finally has secured a $150 million credit line. So, Vanessa, what do we make of finally? Do SMEs need more help?
I think they clearly do. It's a sector that's always worth supporting. It's tough being an SME. Anything that helps with daily operations, helps smooth things out, help these guys grow, has got to be a positive. It's got to be a good thing. So I think it's really great news to hear.
Henk, what do you think? A bank's kind of missing a trick here because we keep seeing all these SMEs coming in with great services for small businesses.
Yeah, I think in general, as Vanessa was saying, it's a very underserved segment, and indeed. And where we see in open banking, actually, the biggest penetration is actually of open banking is within small businesses, which is exciting to see because they can see the importance of using data indeed to reduce administration. If you're a small business owner, you don't want to do all of that. You just want to get on, innovate, create, and do your business. And I think it's a very exciting prospect here. In particular, we are also in close contact with, we're actually software developing, aren't we? We're releasing software updates, etc. So we're looking at what other software developers are doing in this space too. And I think we issued a year ago the Open Banking Impact Report that is into the small business sector. And it was all about cloud accounting softwares. And we teamed up with a couple of them to try to understand where the opportunity is, where the gap is to be addressed in terms of streamlining process for SMEs and make life so much easier. Because if you can optimize your cash flow and reduce late payment fees, etc., that's quite helpful for them. But also the role not only of the owner, but the role of the accountant is changing in all of this. Because these accounting software platforms really, through consent and permission management of open banking, you actually give permission to your accountant to open up all these open banking accounts, etc., and then get an aggregated view and all of market view of your own customer, but also all of market view of what you then can offer to your client as an accountant. So that role of an accountant is just being transformed as we speak, because there's so much more information available now to that accountant to make better decisions.
And especially, I suppose, if they, as you say, if they're using AI, artificial intelligence, to sort of automate more of this. And so, I mean, Vanessa, are they going to be making smarter decisions about when to use credit and when to use debit? I mean,
look, I mean, we just talked about, cash flow management being a huge issue for SMEs, and it's part of where the E2 card comes into the equation as well, right? Being able to kind of choose between using your existing cash balances and dipping into your credit facilities when needed to be able to optimize that cash flow as you go. So I do think that's definitely a big element of it.
The other thing I noticed here is it's a husband and wife founding team. I have no idea whether either of you are married or have partners or whatever, but Henk and then Vanessa, what do you think? Is that brave, running a business with the spouse, or brave or brilliant?
I think that depends on your relationship. Henk, I'm going to play this one to you.
I might not comment on it because she might.
All right, so move this off dangerous ground.
This could be tricky.
Okay. For more insights into how fintechs can better serve SME clients, we've got a whole insight show on exactly this topic. It's called Can Fintech Plug the SME Funding Gap? And it's linked below this. Okay, one quick story that we don't have time to cover in full, which is that Revolut says that it no longer needs good reason to debank customers. In a terms and conditions tweak that was spotted by Revolut customers and shared to UK Tech News, the bank has shifted from needing a good reason to just a reason to shut down a customer's account. Revolut told the publication that this closure policy change is to align with industry standards, one of various measures since securing its UK banking license. But debanking became a hot-button political issue over the past year in the UK because the Reform UK party leader Nigel Farage was debanked by the wealth bank Schotes, and the controversy led to the resignation of NatWest's then CEO, Dame Alison Rose. So this is an interesting story. Yes, it's a small tweak from good reason to reason, but there is a risk here that customers start getting financially excluded. So, just as Nigel Farage had his account closed, Revolut and potentially other banks that close customers' accounts without giving them a clear reason potentially leave customers excluded. And there is a risk here that I think the regulators need to look at to just make sure that customers can get an account. Because if you end up in a world where people are excluded from digital finance, you're actually excluding them from society, you're excluding them from jobs, you're excluding them from all sorts of things. So yes, of course, banks need to be able to shut down accounts if somebody is clearly criminal, or that there's things going on that shouldn't be, there's money laundering or whatever. But equally, I think the regulators need to make sure that customers can get an account, at least from somewhere, from someone. Okay. And finally, we're going to end with something a little bit more lighthearted from the world of business, which is that businesses are letting Generation Z or Generation Z drive their marketing strategy according to the times. It looks like the major driver of digital marketing could be all about embracing immaculate vibes and truly understanding the assignment. That's according to the Times, who has spoken to a number of business owners who are letting their 20-something colleagues fill their marketing material with Gen Z slang. And now marketing videos full of this youth lingo are cropping up all over TikTok. One video features the middle-aged owner of a 12th century bed and breakfast marketing her business with a slang-filled script written by her daughter. So what do we make of this? Gimmicky or meeting the customer where they are? Vanessa, I'm going to throw this to you first, both because you're of your evident youth and also because you're in marketing.
Oh, well, look, I think at the end of the day, we marketers are always out to hit and resonate with the audience, right? And I think that's totally dependent who you're playing at, whether this will land or not. So it'll come back to what's your market and who you're trying to convince that, what you've got to offer is the right thing for them. And if it's the right audience and they identify, then it'll work. If you try and hit someone else with it, probably going to be tricky.
Well, obviously, I'm more from the older generation too, but I was just thinking Gen Z was kind of born from 97. I think at that time, I already setting up my first internet bank, which was quite revolutionary at the time. So this generation is entirely born in a digitally native environment. So we need to better understand. And I often feel like, it's how old and how young you feel, I guess, which is important here. But in essence, understand, etc. So I would have to talk about, who's your customer? Did you follow customer duty rules? How did you onboard, etc. So we need to follow some standards, at least, even in advertising, I guess. And we need to get the controls in place to ensure that we protect end users.
I think Vanessa hit the nail on the head with, it depends who your audience is, right? If your audience is young, absolutely, you need to be using their language. But if you're only using young people's language and your audience is everyone, then you're potentially excluding people. I find my children occasionally use words that I just don't understand.
It's a different world.
Yes, it is a different world, and they like to remind me how old I am. Half the words they use that I don't understand, I think, are probably not appropriate for a podcast. But there's another half that I'm like, I just don't know what you just said. Oh well. All right. Well, that wraps up this week's Fintech Insider News. Thank you so much to my two guests today. Where can people find out a little bit more about you and about your companies? Vanessa, where can people find out a bit more about you?
Well, company-wise, you find us on Enfuce.com, where you get a good idea of the full kind of product suite and things that we bring to market and offer, and hopefully get a little bit of a feel for us as a company and a brand as well. And by all means, look me up on LinkedIn. I'm always excited to connect with people from the industry and have interesting exchanges and, conversations.
And Henk?
I think quite similar for us. I think openbanking.org.uk, packed website with lots of information, and the socials, of course. We're on LinkedIn as well, Twitter, Instagram, UK Open Banking Instagram, and hashtag Open Banking, and of course my own LinkedIn if you want to. Thank you very much.
And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out all about what the team are up to at 11fs.com or by following us on social media. If you're listening on Spotify, you can drop us a comment and tell us what you thought of the show or what you'd like to hear about in future shows. Please do follow the podcast. Let us know what you want to hear about on future shows. If you want to join the conversation, seek us out on social media. Just search for 11FS or Fintech Insider, or you can even email us at podcasts@11fs.com for any new technology emails. We also have a brand new WhatsApp community channel where you can get the inside track on all our content, and you can get involved via the link in the description below. So thank you all so much for listening. Thank you again to my two wonderful guests, and goodbye.